Are you looking to invest but unsure how to begin? Then, ETFs could be the ideal choice for you. So, welcome to Money Gainers Hub, the channel where smart money moves become simple. We break down personal finance wisdom, including earning, saving, wealth building, and investing into powerful and practical tips, so you can make smarter money moves fast. Grab your notebook, get focused, and let's unlock your next financial breakthrough starting right now. ETFs are straightforward, suitable for beginners, and assist in building wealth without the need to select individual stocks. Let's explore this further. What exactly is an ETF? ETF stands for Exchange Traded Fund. Consider it a basket of investments rather than purchasing shares of a single company. You're acquiring a collection of stocks, bonds, or other assets combined together. It's comparable to enjoying a smoothie made from various fruits instead of buying apples, bananas, and berries individually. ETFs are created to track a specific index, sector, commodity, or asset class. This makes them fantastic for diversification and risk management, even for absolute beginners. Why ETFs are ideal for beginners? Here's why it serves as a wise starting point for many investors. Point number 1, diversification. A single ETF can include dozens or even hundreds of companies, thereby minimizing your risk. Point number 2, low cost. The majority of ETFs feature remarkably low fees, especially when compared to mutual funds. Point number 3, liquidity. You can buy and sell ETFs whenever the stock market operates. Point number 4, transparency. You can view the ETF's contents at any time. Point number 5, automatic rebalancing. Numerous ETFs automatically adjust their holdings to meet their objectives. How ETFs differ from stocks and mutual funds. ETFs versus stocks. When you purchase a stock, you're acquiring a share of one company. If that company performs poorly, your investment suffers. However, purchasing an ETF spreads your risk. ETFs versus mutual funds. Mutual funds are overseen by professionals and typically have higher fees alongside minimum investment requirements. Conversely, ETFs are more affordable, flexible, and accessible to smaller investors. What are the categories of ETFs? While there are various ETF types, the most common for beginners include type number 1, index ETFs. These track significant indexes, such as the S&P 500, for example, VOO or SPI. Type number 2, sector ETFs. These concentrate on particular industries like technology, healthcare, or energy. Type number 3, bond ETFs. These invest in government or corporate bonds, offering enhanced stability. Type number 4, international ETFs. These provide exposure to global markets. Type number 5, dividend ETFs. These focus on companies that regularly distribute dividends. What are the well-known beginner-friendly ETFs? Here are several popular and accessible ETFs for beginners. ETF number 1, VOO, tracks the S&P 500 and includes 500 major U.S. companies. ETF number 2, SPY, also follows the S&P 500 and is very liquid. ETF number 3, VTI, it encompasses the entire U.S. stock market. ETF number 4, QQQ, targets the technology-driven NASDAQ 100. ETF number 5, VYM or SCHD. Excellent choices for generating dividend income. All these ETFs are managed by reputable firms like Vanguard, Schwab, and iShares. What are the steps to buy an ETF? Purchasing an ETF is easier than you might think. Step number 1, open a brokerage account. Use platforms like Vanguard, Robinhood, Fidelity, CMC, or eToro for international users. Step number 2, search for the ETF ticker symbol such as VOO or VTI. Step number 3, place a buy order. You can acquire a complete share or a fractional share based on your platform. Step number 4, hold and monitor. Don't fret if the price declines. ETFs are designed for long-term growth. You can even arrange automatic recurring purchases, known as dollar cost averaging. What are the ways of wealth generations of ETFs? ETFs enable you to accumulate wealth in 2 primary ways. Way number 1, capital appreciation. When the ETF's value increases over time, your investment grows. Way number 2, dividends. Certain ETFs pay you cash quarterly simply for holding them. You may opt to reinvest dividends automatically, which aids in compounding your returns over time. What risks should you consider? All investments carry inherent risks. Here's what to keep in mind. Risk number 1, market risk. ETFs can depreciate in value during market declines. This is a typical occurrence, so no need to panic. Risk number 2, sector risk. Investing in specialized or sector ETFs exposes you more to that industry's fluctuations. Risk number 3, tracking error. Sometimes ETFs may not exactly replicate the index they are designed to follow. To mitigate your risk, focus on broad, diversified ETFs and maintain a consistent investment approach. Overall, ETFs are one of the most accessible and secure methods for beginners to start investing. They offer instant diversification, low fees, and the potential for long-term growth with minimal effort. Begin with 1 or 2 beginner-friendly ETFs, invest regularly, and practice patience. If you found this information valuable, please like and subscribe for more investing insights. Be sure to watch our next video on creating your first $1,000 ETF portfolio step by step.